Should you start or run your property development business through a limited company? This was a question that came up at one of our group coaching sessions this week from one of our delegates. So it's something that I'm going to attempt to answer. What I would say is that obviously you need to seek your own professional advice with accountants and solicitors before you actually put this into action. So essentially what I'm going to do is tell you what I would do, and there's some various good reasons why you should do this, but you should also be aware of some of the downsides. So I'm going to cover those as well. Although to be honest, I don't think that the downsides are that significant, but I definitely think you should be aware of them. So the first one is risk. Because let's be honest, property development is a risky business. It's not for those of faint heart. You need to have the stamina to be able to get through it, and that's kind of one of the reasons why we don't allow people just to buy our courses. We go through a process with a discovery call just to make sure that people understand what's involved, that they are a good fit. So while they're looking to purchase from us, we're looking about whether we are willing to sell to them, because we want to make sure that the people who come on board with our programs are successful. Anyway, that's a slight diversion. Anyway, so risk is the main thing that I think that you want to consider, because if something goes wrong in your property development business, you don't want your personal assets to be suffering from that. Now, of course, if you take out a loan, you are going to be asked to give a personal guarantee. The reality is they're probably not going to go after your personal assets. I've heard that many times from loan companies, but having said that, they do have that opportunity to do so if you've given a personal guarantee. So why would they take out a personal guarantee and not use it? Well, one of the reasons is that they want to see that you are firmly committed to the deal that you are proposing. So it's more about understanding where you're coming from and how much commitment that you have to it. Because if you're not committed, you're going to walk away from a loan, and if that kind of is your attitude, then they're definitely much more likely to go after your personal assets. Incidentally, we have a Facebook group which you are free to join. It's Property Development UK. So join us on that group and ask any questions that you may have about property development. The second reason is credibility. When you go to a landowner or you're dealing with professionals such as solicitors, accountants, surveyors, then it shows that you are serious if you've got it within a limited company. But also allows you to project a much more professional organisation. Now, we know it's not that expensive to be able to form a limited company, but yet in the perception of people's eyes, those LTD initials after the name of your business just adds that further level of credibility. And so that's another reason to form a limited company. Incidentally, if you haven't already subscribed, please subscribe. It's kind of a thank you for providing this content, so I'd really appreciate that. So the third thing is the structure of your organization. So if you have a limited company, you as a director and shareholder of that company are investing in this company, and you like in anything that you'd like a limited company on the stock market, a PLC, you would have the same benefits in terms of that. As a director, you do have various responsibilities. I'm not going to cover that. It's kind of not the scope of this video. But what I would suggest is that this becomes your trading company, and that you create a second company as your development. And so this would be, let's say you found a particular piece of land, you're going to build 5 houses on that piece of land, let's say. Then what happens is that this company then contracts this company and lets them do the development. So in other words, what happens is with this company is that they bill this company for the materials, supplying the labor and everything, and they are the ones that are essentially the client, and this becomes basically the contractor. And the reason that you would do that is that if ultimately you decide, or the economy changes, and let's say your exit strategy was to sell the property, and something happened and it was very difficult to sell. So if you think of 2008, 2009, it was very difficult to sell properties in that particular time because a lot of the lenders exited the market. When we do eventually reach a crash, which is not right now, it's a few years away, I don't believe it will be as bad as 2008. I think that's once in a multiple generation timescale, probably once in 80 years. 1929, 2008-9, it kind of like, you know, you can see that sort of time parameter, 80-90 years. Anyway, if you have this development company and you find for some reason, or you decide differently, that you're not going to sell that asset, then what happens is that if you don't do this and you built it within this company, then you wouldn't be able to claim the VAT back, because unlike renovations, new build, you can actually claim all the VAT back on your materials and your labor costs. And in fact, actually, if you're employing labor and it's not your own direct labor, they're not going to charge you VAT in the first place because they can zero rate it. But that's another discussion, and I'm going to do a video on that as well. So that's for the kind of the main purpose. It gives you that additional exit strategy without having a huge liability. Further to that, I would also say, let's say you're running 2 developments at a time, or you've got different land deals stacked up, then I would be creating an additional company for that as well. And the reason for that is that, let's say something catastrophic happened to this company, then you still have this company. So every development I would be putting into different companies. And in fact, there's no reason why you couldn't take a single development site, let's say just those 5 houses, build 2 in one development company and 3 in another. It just mitigates your risk. So this is the main reason, coming back to risk, why I think you should be forming a limited company, should I say. Another reason is if you're trying to transition out of full-time employment into your own business. Through the company, you can pay yourself a salary. So you pay yourself through the PAY system. Obviously, you will pay income tax as you to withdraw that monthly salary, and national insurance and all those other things, but it allows you to take your allowance up to your allowance at least. So even if you weren't going to take a significant amount, but you didn't have other employment, then you should at least take out a salary up to your threshold. Now, there is a slight liability on the employer side for national insurance. Again, this is something that you need to take advice on, because there's also other ways of taking money out of the business as well. And it's it needs a discussion with your accountant, because there'll be specifics that apply to you that don't necessarily apply to other people. And so paying your salary would be a significant reason why you might want to use a limited company. What are some of the downsides of trading within a limited company for your property development business? Well, first of all, one is the increased accounting. It's a little more sophisticated in terms of what you have to produce in terms of accounts. That means that your accountancy fees are likely to be higher, but I don't believe that that's a significant reason, because I think the mitigation of risk really outweighs that liability, that additional financial liability that you're going to incur. A second reason, and particularly comes to when we have multiple structures, a recent tax change means that because we have now moved from a flat rate of 19% corporation tax across the board, and they've now brought in a tapered amount, so the 19% still in place for the first 50,000 pounds of profit. So the first 50,000 is taxed at 19, and then from between 50 and 250,000 it's tapered up to 25%. However, The recent tax change means that if you have an interest in multiple companies, that allowance is divided by the number of companies. So if you've got 2 companies, for instance, so forgetting that you got this one, you got 2 companies, then what's going to happen is that allowance is going to be halved. So it'll be 25 for each company, and of course then 3 companies, you're somewhere around just under 17,000 for each of those companies if it was 3 companies. However, I don't believe that that's significantly a bad thing, because all you do is you make sure that your profits are evenly distributed within those 3 companies. And of course, if you are the one supplying this company, then depending on what you bill them, you can leave a certain amount of profit in this company to cover all the expenses and your salary, but also you can have a certain amount of profit in there. Obviously, the other thing that you have to be aware of is that covering multiple tax years. Again, this is why you need some very good financial advice when you actually start to implement this. So another consideration is getting your assets out of the company. Now, this generally doesn't apply when you are dealing with a build to sell scenario, but if you're dealing with a build to rent and then somewhere down the line you want to liquidate those properties, there are again various tax implications that you need to consider. Most people, I find, although, are in the build to sell model, so this is something that doesn't really affect them, but it's something, a consideration to make and think about it, particularly if you end up having to rent when that was not your initial strategy. So a small downside, I believe, but again, not something I think should really deter you from having a limited company for your property development business. Of course, with a limited company, when you're borrowing money, you are going to have to give a personal guarantee against your personal assets. Having said that, it's unlikely that they're going to go after your personal assets unless they don't believe that you have really done everything in order to salvage the situation. If you've got any questions on this, then put them in the description below or post them in our Facebook group, Property Development UK, and we'll be happy to answer your questions. It's a good group. It's quite small at the moment. It's growing, and there's an opportunity to network with other potential and existing property developers. So I look forward to seeing you on there. Remember to subscribe if you haven't already subscribed, like and share this video. It really helps us and helps us get this message out to many more people. Take care until the next time. The next video I'm going to do actually is on VAT, so you'll be able to get some information on that, which I didn't really cover in this video here.